Namaste everyone, welcome back to the lecture 10 of Fundamental Analysis of Companies. We know we have not been able to make videos from the last 3 months, sorry about that. So in the previous lectures, we started with lecture 1 and we completed lecture 9. So lecture 1 was mostly about the basics. And currently we are on section 1. Just to remind you, we have 4 sections. So section 1 is your company analysis. In the section 1, we have done profit and loss statement. We have done assets and liabilities, which is your balance sheet. We have also done your cash flow statement. Then we have 4 lectures on fundamental and financial ratios. After the financial ratios, we have a lecture 9 on strategy sheet. In this lecture, we have basically defined how to use profit and loss statement, assets and liabilities, cash flow statements, and financial ratio to actually decide if the company is fundamentally strong to buy or not. If you have not checked out these lectures, please do check them out. And especially the strategy sheet part 1 lecture, lecture 9, where we have literally given you a full sheet, and based on the sheet you can actually decide, you can fill the parameters and get a fundamental score. So in today's lecture we'll be actually focusing on the promoters, FIIs, which is your foreign institutional investors, DIIs, which is your domestic institutional investors, basically by looking whether they are buying the shares or whether they are increasing their existing shares or whether they are decreasing their existing shares can actually tell you a lot without actually reading the whole annual report, just by looking whether they are increasing or decreasing their shares. And the second, we are going to talk about block deals. Block deals are generally the deals which are done in blocks. Now, what blocks are and how exactly they are done, we'll be coming up to it. But these deals basically tell you what is the momentum in the market is going on, what are the sentiments for a particular stock, and they also somewhere or else gives you a good fundamental indication. Okay, how we are going to see, and the remaining topics we are going to cover in the next lectures. So let's start. So before starting further, let's try to understand in detail what promoters, FIIs, and DIIs actually are. So you might know that a promoter is someone who identifies business opportunity. Basically, he could be a founder, right? He's the one who actually sets up the business. He's the one who handles the initial setup, who registers the company with Ministry of Corporation Affairs, MCA. A promoter can be a director, a promoter cannot be a director. Generally, when you see if it's a new promoter, they generally go forward and be the director, be the managing director, or the CEOs of the company. But if you see experienced promoters, they basically identify the business opportunities and hire directors and CEOs from outside to run the business. Okay. The second is your foreign institutional investors. Now, these are organizations which are situated outside India. These could be banks, mutual funds, hedge funds, pension funds. Okay. And the third is your domestic institutional investors. These are organizations which are based in India. Again, they could be banks, life insurances, and mutual funds, and all these things. Okay. So basically, whether FIIs, DIIs are selling or buying the share can impact the market in the short term. But if your company is fundamentally strong, you really don't have to sell or buy the shares based on what FII and DIIs are doing. You have to remain calm and stay invested. Let's do a hands-on on how actually to find the promoters, FIIs, and DIIs shares. So if you go to trendyline.com, now this is a new website. Previously, we have used moneycontrol.com and we have also used screener.com. Now we are going to use trendyline.com, and remember, it's a very genuine site. Even Money Control gets all of its pro data from Trendyline, and a lot of other companies do. So if you go to trendyline.com, you just type here Tata Chemicals, just an example, no recommendations, remember. And if you go to shareholding pattern, just click on the shareholding pattern. You will see very nice graphs here. Okay, now this graph tells you the percentage holding of promoters, mutual funds, FIIs, public, and others. Okay, don't get caught away with all the information. Stay with me. Now, if you go to the bottom, you will see the mutual fund holdings. What you can see, this represents the quarterly holding, and the mutual fund has initially decreased, then increased, and then again decreased the holdings. Again, you don't have to worry a lot if mutual funds and FIIs decrease the holding, unless and until they are decreasing it over a very, very long period of time. This might indicate a short-term downtrend, which is actually happening. So, but we still don't want you to speculate this. We want you to stay invested. Learn fundamentals are more important. On the right, you will see the FIIs. You can see that FIIs are also decreasing their holdings, but not a lot. They are still invested. Okay. Now, if you go on the top, the green, this is your main promoter's holding. A decrease in this is definitely a bad sign, and a multiple decrease in this is a very bad sign. Okay. So you can see that the promoters have not decreased their shares. They have stayed at same 37.98%. Now let's read what's written on the right. Promoters' holdings remains unchanged. FIIs have decreased from 14.4% to 14.1%. Number of FIIs have decreased. Okay. And mutual funds have decreased their holdings from 8.5% to 7.2%. But the number of mutual fund schemes remains unchanged. Okay. Institutional investors have increased holdings from 34% to 35%. This is a good sign. Now, what if there is a share where there is no mutual fund, FIIs or DIIs investment? Is it a bad share? Not at all. In fact, there has been cases where such shares where mutual funds and FIIs have not invested at all turns out to be jackpots. Okay, but that doesn't mean just go and buy it. If a company is fundamentally strong, you don't care whether FIIs or MI or mutual funds are buying it or not. You go and buy it. Remember, fundamentals is important. This is just to show a future trend. Suppose you want to invest 20,000 and you see you are seeing a sudden decrease in these holdings, share price is decreasing a bit. Maybe you can wait for a few months and then buy. Okay, but if it's fundamentally strong, you can actually go and buy it. So next, let's try to understand what are block deals. So block deals are the large transaction of securities executed outside the open market. So they are not executed in the normal market where we actually make the trade, okay? And these are generally carried out by institutional investors like mutual funds, hedge funds. And these are carried out in blocks, like in bulk deals. They involve a lot of money, okay? Now, the good thing is that all these information by law has to be available to the general public like us, so we can get them as soon as they happen. There are people who can get it to know before they happen, but we are not to that privilege. Okay. Now, the important thing is that if someone is buying in block, investing a huge amount of money, that means either they know some inside information about that stock or whether they believe that that stock is going to perform better. Although there are cases of stock price manipulation, which we are going to discuss later in the risk assessment. Okay, you have to be aware a lot of institutional investors could actually buy the share price just to skyrocket it, just because they are using not their own funds but the funds of the general public. And although SEBI makes guidelines and makes sure this doesn't happen, but this still happens now and then. So let's go to trendyline.com, and I've already typed Tata Chemicals. When you see this top bar, just click on the deals and go to the block deals. And once you are on the block deals, you can see these are the companies or the institutional investors which have bought or sold the shares, and what is the date, and what is the average price, what is the quantity, and which stock exchange have they used, NSE or BSE. Now the takeaway from here would be that if there is a recent block deal in the last quarter or say recently yesterday, then it makes a lot of sense. If has been a recently block deal of purchase, maybe if you are getting a chance next day and if the share is fundamentally strong, just don't go on a fundamentally weak penny stock and do these things. Remember, there are a lot of institutional investors which might do stock hyping and you might just lose all your money. So don't do it. But if a fundamentally strong company, you see that there has been a recent block deal, maybe yesterday, next day, I think it's a good plan to buy the stock, maybe in small quantities, but yeah, that would definitely give a push to the stock price. Now you might ask me, how will I find all the block deals which happened yesterday? Is it available somewhere? Yes, you can find it directly. Just go on the top, click on superstars and click on bulk block deals. As soon as you click there and go down, you can find that these companies have been bought by these institutional investors. Whether it has been purchased or sold, what is the date, what is the average price, and what is the average quantity. Okay, you can see these two companies, and there is a very common C which you will notice that companies might sell and buy on the same day, like these two companies did. They sell it at 49.45, bought it at 49.08. Why? You know it, guys. Now you're pretty smart. They sell it General public panic, they saw the block deals, they start selling it. They might know that the stock is actually good, so they bought it again. Highly possible. Still just a speculation, but these two companies together doing something, I'm not sure. I will not blame anyone. Maybe they have a point. Okay, now you can see for Edelweiss, Graviton Research actually bought Edelweiss on 24th November. Okay, and again, you can see that on 24th, they have also sold it. They sold it for 69.61 and bought it for 69.53. If you are seeing something like this, just ignore it. Sell, buy, sell, not your game. Okay, if you just see a solid buy and no sell, even for the Citadel, you can see some sell and buy, no bad. Okay, same for Ankita Vishal Shah. So you will see that there are a lot of block deals happening with sell and buy. But trust me, there will be block deals which is like just a buy, maybe Tata Sons buying Tata Chemicals. That would be a good deal to actually look for. Okay, but now you know what not to look for. You just see purchase, don't go and buy it because they just sold it and they just purchased it. Okay. Now let me actually share with you guys something pretty cool. So you might know there are two things. One is block deals and the other is insider trading. Now don't get confused with insider trading, the actual insider trading. Okay, we call it as insider trades. These are not insider trading. I misspelled it before. Insider trading is something which is illegal, which is basically as an employee, if I buy the company shares because I know some information which is not in public, that is illegal. You can go to jail or heavy fines. Now, insider trades are something which are done by your directors, promoters, okay, and these are actually allowed and these are available. So what you have to do, you just go to the insider trades, you click there where I've shown you, and here you can see say ABC Gas International. The promoters have sold the share. Now remember, promoter selling share is a bad sign. But what if promoter is selling the share because he needs the money? Logical, right? So don't just jump to the conclusion. If the company is fundamentally strong, hold it. If the promoter sells it twice, it's a bad sign for sure. Okay. Even the promoters knows it that when they sell the company's share, the share price will go down. Even this will affect the share price. Now you can see, let's take any other many disposals recently, maybe because the market is anyway too high. On 25th November 2023, there has been Polylink Polymers and they have actually acquired the shares. So you can actually get, if you really want to see what all shares are acquired and you want to, then you want to basically go and do the fundamental analysis. That is also a nice strategy because then you know that someone has already done it and they are buying it. Ideally, they have done it and buy it. And then you are filtering it down further and that really gives you an edge. So yeah, this is something you can. So thank you everyone for staying with me and I hope you guys get to learn something new. And based on the suggestions and the feedbacks which we got, we have tried to reduce the video time. We'll try to make it more engaging. And please feel free to leave more suggestions and feedbacks on the above given email ID. Thank you. See you in the next lecture.